Hello everyone and welcome back to the channel. Now today we're going to introduce you to a different marketing strategy than last time. Last time we taught you the market one. Just in case this is your first video, you should look at our other videos just to improve on your strategy in the stock market. Now today we're talking about green takes red. There's a different strategy than before and the concept is slightly different but still simple to use. But before we actually start this, let's give our special thanks to Kelly and other helpful members from T3. Just in case you're new here, we're using the TC2000 for our stock. And now let's look at the chart. Today we will be telling you how you can effectively use green takes red on the stock market. First of all, last time when we did the market one, we used the 1 minute candles, which means that these form after 1 minute. But today, this green takes red especially works on the 2 minute instead of the 1 minute. Now you have to remember that because when you use 1 minute or anything after that, it wouldn't work really. It's not that it wouldn't work, sometimes maybe, but that's just a lucky one. Now 2 minute, you might think that's a long time. Yes, it's true, it's a long time. You need your patience, and you need a lot of patience for this one. Now let's take a look at our Tesla chart. And just in case you're new here, all these lines is no stranger to you. It's very easy to understand. Now these average 8, average 21, average 100 are exponential moving average, which the period is 8, 21 and 100. This VWAP right here is also a very important factor, as every day we use it as a stat. Like right here, it hits and it goes down. It's like a basic moving trend that helps us judge when we should buy to. Now this moving average 200, as I have spoken before, is not an exponential moving average, don't get mixed up. It is a simple moving average. Now this line is especially important when we make all these trades. Today, here, we will tell you about the green takes red now. Now let's take a look at Tesla chart. Here's going up and up. Now let's find a setup. So let's tell you about the first thing you want to look out when you do a green takes red. You want to find a red bar. Yes, a red bar. Now the red bar, after you see that has formed finish or before, you want to check the high point, which is right here, 751.25. Now you want to wait until the bid, since we're buying a call. If you're buying a put, which means going down, you want to look at the ask. But here, look at the high point here is 751.25, which means that you have to remember that number because you want the next few candles to pass this number and you can start buying it. Now let's take a look at all these green candles. It never passed it, did it? So every time it has a new red bar, it resets the highest number to this highest number instead. Now it didn't pass, goes down again, so resets here. Didn't pass, right? Resets right here at 733.51. Now you see this green bar at around 34 or 36 minutes later. It actually passed this red bar. That is why I told you we need patience, because this took a long time to set up. But right after that, you will earn a great amount of profit. Now look at this red bar and look at this green bar. You notice that it actually went past. So this is when you want to buy, when the bid hits 733.51 exceeds and go up. And after this, we also have many more, which actually happens to go in a very up trend. Now, last time, in case you have already seen our other video, why would we not sell when this has hit below this starting point? That's because we earn a greater profit for this strategy, green takes red, or you would say GTR. Now, greater profit means greater risk. Not necessarily, but in this term, I could say it like that. Now that means that you want to hold it for a longer time, just to not lose it. Now, here. Last time we used to say that we cut loss right at 732.25. That's because we were using the market one strategy. But this time it's a long-term profit. So here we actually put this sell and cut loss point at the lowest point of this bar, which you can check on the top left right here when I click 730.45. Now this clearly passed the starting point, but it didn't pass the lowest point, which means that you should keep on holding it. Now that's basically all you need to do a normal green takes red. But there's another favorable factor they wanna understand, is that the bar should be above the average 200, the moving average 200 that you see right here. If it's above it, then you can go for a call. If it's below it, you don't worry. If it's below it, it doesn't mean you can't do anything. If it's below it, it means that the trend is probably going down, and if it isn't, then don't buy. But if it is, then you can buy a put, because green takes red is not its only name. There's also red takes green, which means that even when it's red bars, you can work too. Now, although I say favorable, but if you change it to red takes green, you'll see that none of these work, because it's not actually below this line, and the trend is totally different. Now, how red takes green would work is that you want to check the green's low, and you want the red to pass the green's low. And that's basically how a red takes green works. And you want to consider all those factors from before, except the moving average 200 must be above all those candles. Okay, now let's give you guys another example. Here you can take a small profit, as you can see. High point 740.10. Here, clearly past it, went up. Yes. And now we wouldn't actually suggest you do this one, because as you can see, right, although you made a profit, but what if it actually went down? You wouldn't know, because I would recommend you already sold here, because look at the low point. It passed, right? Now don't be greedy, don't hold it on. I know it worked, but most of the time it didn't. So yeah, that's basically it for Tesla. Let's give you guys another example, right? Let's see. Let's use Meta. Yeah, Meta. Okay. Oh, Meta's chart is quite wobbly and it's quite unstable, but that doesn't mean you can't use green takes red right here. Look at this. No, right here. Now this high is 178.28 and it has passed on the bid. Now you wanna buy and then get that profit. So nice. And this one you didn't have to wait that long, and it's a quick profit, right? Now you might have another question. Right after I click these two bars, you notice something. Their low is actually the same. So why do we not sell? So usually, yes, the low they hit, but sometimes, mostly on the stock market, actually does a hit and bounce most of the time, just like how it wouldn't go up before some extent and then will just immediately go back down. That's almost the same here. The stock market actually wants to trick you into selling here, but if you did it, you would see that it went up. And if it happened before it passed, it doesn't matter. You don't have to think about it. Now let's give you another example here. Oh, that's a great profit right here. Now this is about like 40 or whatever minutes. Now here, this is the setup right here. The high is 177.26, as you can see right here when I click on it. Now this passed clearly, and this is a very low cut loss point which it didn't hit. Now goes up, and you want to sell it right here or any time around here, as long as you make a profit, right? You don't have to think about your losses. The profit matters over the losses. Obviously you want to earn money, not lose money. If you think too much or you overthink or FOMO, you're gonna lose money. So don't overthink. And let's give you another example. Oh, these bars are actually really nice. Now look at these. Okay, this red bar, it didn't go past it, so reset here. When it hits here, this high point right here, you want to buy it again. It went up. It's like a constant flux of going up and moving up. So now that's basically it for all of your information and tactic to use the green takes red or red takes green. Anyone you want to use it anytime. And when the chart is going down, you want to use the red takes green. When the chart is going up or over the moving average 200, for just now will be below, you want to use the green takes red. Now it works on both sides. It's a very useful thing to use. And do remember, 2 minutes, not 1 minute. Don't make that mistake. Yes. And let's see, there's nothing else, and thanks for watching. Do remember to subscribe so that you can look at all our different strategies, and I'm signing out right now. Goodbye.